Okay, we're excited now. We found a house that we actually want to put an offer on. So let me kind of cover what goes into putting an offer together. So there's a couple things. Price obviously is one of them. So one of the things that we're going to want to do first off is run comparables for the homes in the area that have recently sold that are similar to the house that you want. We want to make sure we understand what the going rate is for the market for that type home. We don't want to submit an offer that's more than probably what the market is bearing at the time. So once we've determined that, then we're going to talk about what is the price that we want to go in at. Well, a lot of factors impact that. How long has the home been on the market? Is it vacant? How motivated are the sellers? I will typically be in conversation with the other agent prior to submitting an offer to try to learn information from the seller side, what their motivations are. So, price will be depending on a lot of that information. The next thing that's going to go into an offer is your financial structure. And what I mean by that is, how is your loan structured if you are getting a loan? If you're not, if you're paying cash, that's great. Cash is king. All sellers love cash offers. But if you are getting a loan, what is the structure financially? How much money are you putting down? How much are you financing? So that's critical, is financial structure. Next thing we're going to have to determine is earnest money. A buyer will typically deposit some earnest money with the title company. It's kind of like a deposit that shows your how interested you are in the property. The more earnest money, it sends a signal to the seller that you really like the house a lot and you're very serious about buying a home. Earnest money is the money that you risk if you default on the contract and don't close or live up to the terms of the contract. So earnest money is typically 1% of the contract price. So the more, $300,000 house, $3,000 down for earnest or more. I always tell my buyers that, if you're putting down payment, your earnest money goes towards your down payment at closing. So I always tell them, the more earnest money, the better. The next thing you're going to need to determine is who's going to pay for the title insurance. In Texas, we close our contracts at title companies. Those title companies will issue an insurance policy ensuring that they're going to deliver to the buyer a clear title. And if something after closing shows up, other lien that wasn't disclosed, the title insurance will cover that. That's a negotiable item. In the old days, the seller used to pay for that. Nowadays, it's pretty negotiable, and buyers are picking up that expense. So that's one thing, who's paying for the title. The next thing is, does the property have a survey, a property survey? And what I don't mean like, how good are we doing? We're talking about how the house sits on the lot, on the property. If the buyer or if the seller does not have one to pass along to the buyers, then someone's going to need to buy one, especially if you're getting a loan. The lender is going to require that. So we're going to figure out, are we going to pay for that, or is the seller? The next thing that we're going to want to talk about, think about is a home warranty. Traditionally, in the old days, the seller used to buy a home warranty for the buyer. This is 1 year home warranty on the major mechanicals within the house. Nowadays, in the competitive market, we're seeing a lot of buyers either take that burden on themselves or not get a home warranty at all. Next thing, one of the more important things is, when are you going to want to close on this deal? Typically, closing, if you're getting a loan, will take anywhere from 30 to 45 days. And you need to kind of find out, does that fit within the timeline that the seller is looking for? Say if the seller hasn't found a home yet, they're waiting for a contract on their home, well, then they go look for a home. So it may take longer. So one of the things you're really going to need to know is, what date do you want to close that kind of satisfies everybody. Lastly, one of the more important things is the option period. In Texas, we have a clause called a option period. And basically what that is that's a period of time from the beginning of the contract, and it goes for, 5, 7, 10 days or more, depends. But that's a period of time that the buyer can get out of the contract for any reason and get their earnest money back. Now, the purpose for the option period is typically when a buyer will do inspections and negotiate any repairs that may come up that they were unaware of going into the contract. So there's a nominal fee for that. It ranges from anywhere from $100, $200, $300, depending on the length of the option period. And then, of course, one of the things that a lot of people overlook is, when does the buyer want to take possession of the house, or when does the seller want to give possession of the house? And I know most people says, well, I want it at closing. Well, not all the time, because a lot of times the seller, if they haven't found a home, may need time after closing. They need their money from the closing, but they got to now go look for a house after the closing. So they may need to lease the property back from the buyer. Or what I found as one of my good practices that I try to tell my buyers is, let the buyer stay in the house a couple days for free after closing. And what I have found, that the seller tends to leave the house in better condition. It's less stressful on them, and it's a thing that they really appreciate when you submit the offer. In the next section, I'm going to go into a little bit more detail about the best practices and how to make your offer really stand out. Okay, so let's continue. This video series, I'm going to talk a little bit about the best practices for getting the best offer. In the Dallas market, as you know, and we talked about, it's been a seller's market for the last 3 to 5 years. And what that means is that the sellers are able to kind of control and get what they want when selling their homes. There's lots of multiple offers out there, multiple people bidding on the same house. And so putting in the best offer possible that matches what the seller's desires are, you always have a good chance of winning that deal. Seller's desires doesn't always reflect just price. Give me the best price. A seller may have a need to sell quickly. And so the person that can, close fast may have an upper leg over someone that's offering more money. So the best thing we need to find out as a real estate agent, what I try to do is chat with the other agent and find out, what is the seller's desires? What is it they're looking for in a good offer? Is it just price, or is it timing? Is it they want a family there? Believe it or not, people get particular about who's going to buy their home. So those are things that I'm going to find out for you as a buyer, and we'll kind of structure our offer like that. So understand that not necessarily is the best price going to get you the deal. We got to understand what those sellers' desires are. Any concessions that we can give to the seller. For example, it's traditional that the seller will pay for the owner's title policy. Well, now in this crazy multiple offer market, buyers are picking up that expense. That's a concession. We'll take that on. The other thing that happens a lot now is the home warranty. In a balanced market, it was traditional that the seller would pay for a home warranty for a buyer. Well, guess what? Buyers are either opting not to get a home warranty, or they're going to pay for that themselves. In some cases, I've actually bought the buyer a home warranty. It just depends on the situation. Is there non-realty items in the house that the seller's interested in? He's got patio furniture that he's looking to sell. Well, hey, if you need patio furniture, it might be a good idea to buy it, especially if it's in good condition, because you're probably not going to find it anywhere cheaper than what the seller's going to sell it for. And then when you get it under contract, understand you want to be flexible about your repair requirements. Don't nitpick the seller on every deal, because, if you get the house under contract in a multiple offer situation and then you hit him hard with all a litany of repairs, he could say, you know what, I'm not going to do anything. I got 3 other people that want to buy the house. So keep that in mind as well. And then just be flexible. If things change throughout the transaction, try to be as flexible as possible. Now, with all that said, I understand a buyer has needs too, and we want to try to match those up. The next topic is, if you're under contract and something happens, or you do repairs and you realize it's just too much work that this house needs, how can I get out of this deal? Well, there's a couple different what we call termination options or exit options. The primary one is what we talked about in the previous video, is the option period. That's a period of time that you pay for, typically $100 to $200, anywhere from 7 to 10 days, that you can get out of a transaction. You lose your option money, but you get your earnest money back and you're out of the contract. The other one, that if the home is located in a homeowners association where there's an HOA, there's a stipulation in the contract that says that they have to provide you the rules of the HOA within a certain period of time. And if there's something in those rules that you cannot live with, I like to use the chicken coop analogy, is that, say I raise chickens, I did not realize that the HOA does not allow chickens in the backyard. Well, that impacts me. I can get out of this contract, get my earnest money back. That's another way. And then, of course, lastly, if the home just does not appraise, there's an appraisal language in the contract that if the home does not meet the contract value, that the buyer can get out of the deal through that as well. So that is kind of some of the best practices of getting a home. And again, this is a complicated topic. You need to talk about these face-to-face, one-on-one. In the next video, we're going to talk about, now that you got the home under contract, we're going to do inspections and what's important about inspections and defects within a home. So stick around. I think you're going to enjoy that one.